Hey everybody, how's it going? We're having another show and we've got some great guests and I don't know which camera I'm looking at. Looks like both of them, but I'm here with my good friend and co-host, Mr. Edward Special Milewski. Edward.
How you doing, James?
Good, how are you doing? How was the drive down the highway today?
Beautiful day.
It is a beautiful day.
Got to be 10, 12 degrees.
Yeah.
Maybe
I think
a little warmer, yeah.
Yeah, I caught half a cistern full of water in rain last night. Harvesting the rainwater.
Cistern with a C.
Cistern with a C, not your sister.
No, not your sister. No.
Okay, so let's see. What do we got here? We're going to talk about lithium. We have Dr. John Burba as our guest. We have Steve Cochran as a guest. We have
interest rates.
We have to talk about copper, lithium, cobalt, tin. Follow us on Twitter, Instagram, LinkedIn, and Facebook. Make sure you never miss a show by subscribing to our YouTube channel and clicking on the little notifications bell. If you're interested in getting monthly actionable investment ideas in the cannabis space to your inbox, subscribe to the newsletter at midasletter.com. We're going to jump to a couple of audience questions here before we lose our shit too badly. Brad Travarez wants to know thoughts on your favorite influencer buying into and being on the board of his favorite influencing social media. I think he's referring to Elon Musk, if I didn't know any better. My favorite influencer, you mean stock promoter, Elon Musk.
Right. You know what? I just got it. Duh.
Yeah.
Wake up, Ed.
His favorite influencing social media. Well, Brad, that's a great question. My thought is that, you know, if you can't get your social media platform to bend the rules to your liking, then buy them and make the rules bend to your liking. And Elon Musk, as the richest disclosed person in the world, certainly has the ability to do that. So, what do I think? Well, let's just see. Would I do it if I were in his shoes? Absolutely! Would I try to start my own social media network like Donald Trump did? No. Look what happened to, what is it called? Truth Social?
You know, he it's a brilliant shot. You know, he could probably if he figures something with this thing, it could be another $1 trillion company. You know, it could.
You mean if he takes over management of Twitter and makes it...
He's on the board now.
Well, he's on the board. I mean, he owns 10% of the company. I bet you there's nobody else on the board with 10% of the company.
He's the biggest shareholder.
He's the biggest private shareholder, they said.
You know what?
What does Jack Dorsey own of that?
I don't.
We could go look, but we don't care.
We really don't care. Really, you know what? The stocks have been it's been well received.
Yes.
Up quite a bit.
Such a different game, the billionaires.
Yeah.
Willie Wilson wants to know, I've been dying to hear your comments on the House passing a bill to federally decriminalize marijuana and the impact
Good question.
on cannabis.
Good question for you.
Good question for me. Why me?
Because you're the authority.
I don't have any cannabis stocks anymore. In fact, I haven't even smoked.
No, but he's not us. He's talking about the bill, talking about the legal. You're Mr. Legal.
Well, here's what we'll do, Willie, as a more thorough way to answer your question. I'm going to pull up our cannabis list of U.S. cannabis stocks. They come out with this statement, and what happens? Cannabis stocks are selling off. But was it after a big rip-up on the news? No. So what's happening here? Why is the market not concerned? Why are all these stocks selling off? Look at this. There are no exceptions. There are none. Why is that? You know why that is? Because at the end of the day, all that cannabis legalization nationally is going to do is make weed even cheaper. It's going to make it even, now you can grow it in the sunniest country and sell it in the coldest one, but it's going to be the same price because there's no interborder barriers.
Right.
So the margins are about to even tighten up more.
Oh, yeah. No.
And you know what? By decriminalizing it federally, you actually open the door for off-market, non-licensed cannabis grown by everybody and their dog.
It's going to be a tough industry for a while until all the...
Well, as I said back in 2017... You don't see any companies trading publicly and making huge gains trading on cannabis or wheat or anything else that is an ingredient, only an ingredient. And weed is no exception. It's just an ingredient.
It's a plant.
Yeah, I've got 12 of them growing in my basement. I got a license on the wall right there to grow a total of 250 this year alone.
And you're going to grow how many?
12. I'm even looking at the 12. I'm going, why do I have 12 plants? Like, one of my plants gives me enough weed for 2 years.
What?
Yeah! They don't call me Farmer Jimmy for nothing.
Here comes Farmer Jimmy. We knew we'd see him today.
Yeah, but anyway, so to answer your question,
Farmer Jim,
the bottom line is that is bad news for publicly traded cannabis companies in the United States because it removes all the friction in the cannabis industry that actually gave them all at least a prayer and a hope of squeezing a margin. That hope and prayer is now gone. I predict that the largest cannabis companies are going to lose 80% of their value in the next 6 months. Mark my words, man.
Is that because they're going to make it legal?
Well, because it's been decriminalized. So it's not like it's only decriminalized for the publicly traded cannabis companies. It's decriminalized for everybody. Everybody can grow it now. You want to talk to some people in California you think they know how to grow some weed and were only kept out of the industry because they'd never pass a test for a license at some county level? There's a lot of them.
Right.
So guess what? The market, already flooded with every variety of cannabis extraction concentrate there is about to become doubly flooded.
Really?
It's over.
So everybody's going to be stoned.
No. This is the interesting thing. There aren't going to be new customers because it's now federally decriminalized. There might be a handful. But I guarantee you, there's not going to be any parabolic curve in the number of customers who suddenly go, oh, it's legal now? I think I'll get high and scramble my brain and be paranoid and lock myself in a dark room because I didn't like it when it was illegal and I didn't smoke it and instead I went and got a career and a profession and made billions. Anyways. We digress. Let's go. Let's keep going.
Yeah.
SJ, can you explain how futures work and how they affect current prices?
Well,
commodities are the foundational wealth-generating asset class next to prostitution, and
they're consumed.
So
they're consumed over and over and over.
So the futures market was established in the 1930s so that a bank could correctly forecast how much money he could safely lend to a farmer who needed to buy seed and equipment in the spring and grow it throughout the season. So the futures market was a way to predict the future price of commodities, especially in the agricultural realm, so that companies who are farmers could basically borrow money and the bankers would have a measure of comfort on what level their level of risk was. In the metallic space, if you're a company that builds steel automotive frames, then you want to have an ability to see what the price is going to be going out. So you make sure you build in the pricing to your cars right away. So it was originally a price discovery mechanism, a way for banks to forecast how much they could safely advance to companies based on what the future price of their commodity being produced was going to be. Now, the Commodity Research Board was founded in 1930 by a journalist named John, can't remember, anyways. It was a journalist who founded the Commodities Research Board. So now everybody follows the CRB index, which is the Commodities Research Board index. 2 years ago, the Commodities Research Board was bought by the company that owns barchart.com. And so the research part of that was sold off to a private entity for profit. And the CRB index is now managed by Thomson Reuters. So there are 19 commodities. There's 19 commodities in the Commodities Research Board index, and they are 41% energy, 39% agricultural, 7% metals, and the rest is a mix of other stuff.
Wow.
But the interesting thing is these commodities, this mix of commodities never changes, and they're arithmetically averaged to deliver the index movement. So commodities and futures are separate things. You never want to confuse commodities with futures. Futures are a derivative of commodities, though they no longer bear any relationship to the volume of commodity available to be mined, sold, grown, produced, in inventory, out of inventory, consumed, whatever. The futures market is a corrupt mechanism managed by the CFTC, the Commodities and Futures Trading Commission in the United States, that allows banks now to manipulate the price of commodities by creating the share futures price as a price determinant not a discovery mechanism. It now determines. Everybody, you talk to any talking head on CNBC, it's like, oh, we're going to look at the futures. Not the commodity price, the futures price. Because apparently we shouldn't care what the price is today. We should only care what the futures price is, run by this corruptly managed.
But you need a futures price in certain industries to tie the gap between the speculator and the hedger.
The way the world has been.
I mean, it's...
Yes, but there are so many corrupt aspects to the futures market. For instance, the large speculative traders are identified, not by name, only by their positions. And the Commitment of Traders report, which is the report that comes out every 2 weeks that tabulates what happened.
I think it comes out every week.
Is it every week now?
I think so.
Okay, well, I haven't been...
Friday night, I think it comes out. Maybe not.
But the bottom line is you can't tell who's buying what. And there's just no way to know if a guy who's listed as a trader is also listed as a industrial user, which is often the case. So there are many cases where in a futures contract where an entity says, I have this commodity in 3 months. Somebody make a bid for it. And the futures guy comes in and says, we will give you X for that delivered in 3 months. And then the market, if it goes down, this guy has to deliver the commodity, and these guys, the futures buyers, made a profit. But if the commodity goes up higher than these guys were making, then they paid too much. Did I just get that backwards? Anyway, so bottom line is, futures market is a morass of vipers, and we don't go near it. Joey F., are there predictions for when the world will run out of oil reserves, and what's going to happen when they do? Wow.
Well, there's all kinds of predictions. Peak oil, right?
Well, when you say oil, do you mean hydrocarbons generally?
Well, there's a term out there called peak oil.
That was
Sprott was involved with that, I think, somehow.
That was back in the 2010.
Yeah, but there's always this idea that it's a finite thing, right?
Well, all things on a long enough timeline are finite.
Exactly.
And all things are sustainable on a short enough timeline. So finite and sustainable are relative terms, which have no place when describing points in the future of prediction.
There'll be a time when we won't be able to take any more oil out of the earth. There will be a time.
Well, I mean, if you looked at what the scientists are saying, the head of the UN Security Council Science Board included, that this is the last year where we can continue to burn energy, burn fossil fuels as we do, at the rate we have been, before the Earth goes into a chronic climate-driven collapse. And so I think we saw the precursors to that in the atmospheric rivers, the wildfires, the
You think it's starting?
heat waves. I think it's starting. In fact,
so
I have some friends who live close to me here who may remember that I actually said it's already too late. This cannot be reversed when I was 19 years old. Believe it or not. I'm not shitting you. This is why I moved back here, because I got to find these guys. You remember that, right? You remember I said that, right?
That was me. Tell him.
Fuck Nuriel Beanie.
Tell him. It's me.
If you're enjoying the show, subscribe to Midas Letter on YouTube so you stay up to date on everything investment. Direct lithium extraction technologies, as per John Burba's contribution today.
Tin had a big move this week.
Tin Man. Tin had a big move?
Big move,
48,000 higher now then?
It was the highest, I think they said it was the highest in 13 years.
That tin, the price of that tin?
Yeah.
So no more tin foil. I don't know if you've noticed, but the price of everything has gone through the roof. I bought a box of screws.
I know. This is...
I paid $32 for a box of screws, 100 screws.
This could be the beginning of the great cleansing. We've talked about this now. We've been talking about this for a few months. Remember we talked about, we put up the chart, and I said Amazon did a double top. And ever since then, it's been shit. served on a special plate.
Well, but here's the thing.
What are you looking at there?
This is the price of gold today.
Okay.
And this is the moving trend.
Yeah.
And we just keep sliding this down, and the lows are getting higher, the highs are getting higher.
There's a trend there. It's...
Yeah, which suggests to me that all the jawboning of the Fed in the world is not going to tame the inflation beast anytime soon.
So you were saying that they were going to. You had a little tidbit there for us.
Well, the Fed, one of the members, obviously very successful woman,
probably Ms. then
economist. She's very dovish. Okay, her view is, keep printing. She's come out and said, as hawkish a statement, and that just roiled the markets, and we've been in sell mode the last 3 days.
Okay, so here's
balance sheet reduction soon and at a rat. That got everybody going, holy smokes. That's just takes liquidity out.
Right. So now for the context of the audience, what does that mean? The balance sheet. The balance sheet is the place where the Fed, who takes all of the fabricated money that it creates by buying treasuries. So basically the Fed writes a check for money it doesn't have. The Treasury issues bonds to take the money created by the Fed and thereby keep the whole illusion of U.S. debt, which is just bullshit. The U.S. is broke, flat broke, and basically keeps that ball moving down the field. For all of the participants, central banks, tier one banks, the banking system generally, the real estate market, that keep the whole illusion afloat, that keep the billionaires / oligarchs in power. So that's not going to change anytime soon, and the Federal Reserve is arguably a private system whose main function, if I might digress, is to keep the illusion alive, the illusion of perpetual debt, the illusion that this debt is ever going to be repaid. But essentially, there are certain things that the Fed...
They're going to inflate it away again, right?
They think they're going to.
They think they're going to.
They think they're going to.
You think a day of reckoning is coming?
I think they should all be dragged into the streets and knifed right in the heart, personally. I mean, really.
You're a mean boy.
Yeah, well, I've had it up to here.
Have you?
Oh, come on. Oh. Now, I've been able to...
Didn't you tell me you were going to buy a sirloin roast for $130 the other day?
No, I pointed out that it was a prime rib roast. It was only 3-4 pounds, and it was $119 in the local supermarket.
Nice.
No, that's not nice.
Good value.
No, it's not. That's highway robbery.
Oh,
that's cattle rustling right there.
It could get wild. It could get wild.
Well, it already is kind of wild. I mean, $32 for 100 screws that, 8 weeks ago cost $8. So that's not what's
really
inflation.
expensive is diesel.
I got a tank of diesel that I fill up because I've got a farm truck.
Yeah.
And I paid December 2021 prices, which, do you know how much I paid in December 2021 for 400 liters of diesel?
December 2021.
89 cents.
What?
89 cents per liter.
Now it's $2.
And now it's $2. So as I was saying,
8%
inflation is bullshit. 16% inflation is bullshit.
They're just numbers.
We have 200% inflation underway right now in month over month from last year. And this is why I think that the Fed people should be dragged out of their beds while they're sleeping and knifed in the heart in the street. I say that, tongue in cheek, which is probably a brand of humor too harsh for the likes of Google and mainstream America, but I don't apologize.
Can I say something?
Please do.
So you know how, when you're doing reasonably okay, you don't care about what the politicians are up to. But then it gets a little tough for you because they've really messed it up. Then you start thinking, it's because of them that I've got all these miseries. And look at their lifestyles. They never change. They're in the finest restaurants, wearing the finest clothing. It's the best life. It is. If you
civic life as opposed to country life.
I don't know.
This is the thing.
Well, country life's pretty nice too, though.
Country
life is pretty nice.
Economists assume that people who live in the country want to make more money so they can live in the city. This is a basic assumption of economics today.
Right. I don't think that's right.
Well,
You think that's what they think?
Well, I just read it in a economic textbook from Harvard.
circa 1963. So I know that's how they thought. I don't know if it's what they think now.
All right,
now I think they're thinking, let's make gun laws non-existent so that all the population is armed, and then when the population gets to the breaking point, the social friction will kick in and everybody will start shooting each other. And those of us who are wealthy enough to have a private island or an underground bunker of some well-appointed nature will retreat there while the shooting continues.
Wow.
And then we'll come out and clean up. Anyways, but that's...
look what goes on in look what goes on in the Ukraine. Some of this stuff's horrific.
Some of it?
Well, I said that wrong.
Yeah.
I meant to say
and here's the thing, though, about what's going on in the Ukraine. It has nothing to do with the reunification of old Russia, as Putin would have us believe. It has nothing to do with the threat NATO poses by having Ukraine being a member. It has everything to do with the fact that the Ukraine has 2 trillion cubic feet of natural gas in its immediate offshore accessible region, and Hunter Biden, son of Joe Biden, who was on the board of Bursima, the Ukrainian company that controls all of the energy assets in Ukraine's purview, was getting ready to bring that all online. And that's what the war is about. It has nothing to do. And so the egregious killing in the streets of Bucha by the retreating Russian army is a thumb in the eye to Biden to say, this is what happens when you try to come in our backyard. So don't buy into any of this bullshit mainstream media poppycock. This is not what's happening. It's all about the fight for the control of the energy in the ground in the Ukraine. Yeah. That's my opinion.
Yeah, that's like following the Fed, right? You can't don't fight the Fed. In other words, follow the real money here. Like this is big
here's
money.
The interesting thing. Now when the Fed comes out with a very bad announcement, what happens first? What happens pre-market? All of the index futures are bid up like crazy. By some mysterious reason, somebody interprets the Fed's bad news as a buying indication. Well, if the Fed is going to, we had the Fed put, where we knew the Fed was going to continue to print money, so the Fed put basically puts a floor on the bottom of the market. Everybody counts on that. But no. Now the Fed is withdrawing stimulus, but there's something else going on. I think it's the Fed promote. And I think the Fed is doing something behind the scenes to induce purchases of index futures pre-market on days where they have bad news. And then they try to offset the sell-off through some small invisible group. Call it the President's Working Group on Capital Markets. Call it the Punch Protection Team. Call it just an invisible bunch of guys who have been the main beneficiaries of stimulus for the last 10 years. Fuckers. Those fuckers.
You fucker.
Anyways, I digress. Bye.
Look. If the inflation thing gets out of control, the masses revolt and they lose power.
The masses revolt.
Yeah, like the masses. Is
that you and me?
Well, yeah.
I'm feeling pretty massive. Yeah. The reason I like this shirt is it makes me look
the masses. The masses. No,
not two masses.
You idiot! It's not the masses. It's the massives.
Coming up next is Dr. John Burba. He's the CEO. Oh, look at my hair.
Oh.
And founder of International Battery Metals Limited. My next guest is Dr. John Burba, CEO of International Battery Metals Limited, trading on the CSE under the symbol IBAT and in the United States under the symbol IBATF. Dr. Burba, welcome.
Thank you. I'm excited to be with you.
Yes, I'm excited to have you. In particular, because of the outstanding performance of your company's share price in the last, call it 8 weeks, you've gone from $3 a share to now over $6 a share. What has been the impetus driving that, besides the obvious, the lithium price?
Well, lithium price is a big thing, of course, but I think that for us, we have completed the build on our mobile lithium extraction plant. We've assembled it, and we're entering into the factory acceptance test. And shortly, probably in May, we will be literally extracting lithium from brines that we're going to be getting from a number of resources. All of this is taking place at a fab shop facility in Louisiana. And we'll be using real brines from the United States, Argentina, Chile, and so we'll be demonstrating that this system, how the system performs with those various brines. Once we're completed with that, we will drain the system and then we will take it apart and put it on a ship and send it to South America. And so this equipment is already spoken for, and it will end up at a salar either in Chile or Argentina.
I see. So is the facility then in Louisiana a pilot plant?
No, this is a commercial scale plant.
Okay. So what rate of throughput does it have of brine solution?
Yeah, about 400,000 gallons per day of brine.
That's going to produce over 20,000 tons per year, I would think.
It won't be quite that much. If we were sitting on a brine such as the brine at Salar Atacama, where lithium concentration is 2,000 parts per million, we could probably be approaching 10,000 tons. If we're on a salar like Salar Hombre Muerto, where the lithium concentration's nominally about 600 parts per million, we're probably more in the range of 5,000 tons per year. So in all of these systems, because you're hydraulically bound, you can only pump so much brine and water through. Lithium concentration is the biggest determinant in terms of productivity on a particular piece of equipment. Then the next thing is, what fraction of that lithium do you actually recover as a useful product?
Our last guest was Jonathan Evans, who's the CEO of Lithium Americas, and he was saying that the direct lithium extraction technologies are all bespoke to the brine based on its chemistry. So have you developed a process that is less specific to a particular brine chemistry that can handle a wider range?
Yes.
Okay, and so you're using an exorbitant technology that I imagine where the brine solution is passing across through exorbitant beads that then selectively extract lithium and isolate it from the impurities?
Correct. And our particular absorbent has a stunningly high selectivity factor.
Okay, can you talk a bit about the science behind the selectivity? How does that process work?
With most of these direct lithium extraction technologies, he's correct. They're very sensitive to the brine, because the brines are very complicated and they're different. So the brine in Chile will be somewhat different from the brine in Argentina. In fact, the brine in the Atacama, it changes from location to location on Salar Atacama. And that has to do with the diagenesis of the formation of that particular salar. But the brines in North America are different, and even across the United States, they're different. So we can see brines, some of the brines that we'll be testing from the United States will have very high calcium levels, high sulfate, lower magnesium, and they'll have lithium concentrations in the range of probably 400 or 500 parts per million. The Chilean brine is very high in sodium and potassium, lower in calcium and magnesium, but they have a lot of borate and sulfate in them. The salar, the brine in Hombre Muerto at FMC or Libet's plant is very similar to the salar in the Atacama, except that the lithium concentration is not as high. So you have variance in all of these. So the absorbent that we're using is one that a partner of mine and I invented back in 1992. And this particular material has an extreme selectivity for lithium, and that's about the only metal it will pick up. So it ignores the other metals. And then it has a double selectivity. We can set the selectivity for an ion that we want to pick up, an anion, and so it's selected for chloride. So this thing picks up lithium chloride and ignores essentially everything else in the brine. Therefore, this particular technology is not as sensitive to brine composition as, say, ion exchange systems and other kinds of technologies people would be looking at.
I've been studying direct lithium extraction technologies, and apart from the membrane extractions and the ion transfer, the exorbitant bead process has, it's largely its economics are largely determined by how many cycles you can use them for before you have to replace them, because as sort of highly specialized engineered adsorbent beads, they have a limited life, and then you have to either recycle them or replace them. So in your process, how many times can you use the same sort of batch of beads before you have to replace them, and how does that affect the economics?
Well, to begin with, our process, the material that we're using is not very expensive. And it's a very simple process to make the absorbent. Okay, and so if the system is treated correctly, we anticipate probably about a 2-year life on the absorbent. And you don't have to dump everything and put in new material. What happens with this is that there is some mechanical degradation, excuse me, of the absorbent. And so we just remove that fine material from the column and then backfill with enough material to top it off. It's pretty similar life to what one would see with typical ion exchange resin. So some of the materials that people are working with tend to be quite friable, and so that may be part of their problem.
What is the sort of target cost of production per ton of finished lithium product? Where is that sweet spot from your perspective in IBAT?
Until we actually are operating on consistently on a real brine, I'd say until we're in commercial operation, I'm going to be hesitant to put a number on it.
There's a lot of interest from obviously Chinese battery manufacturers to secure future supply of lithium for their battery plants, especially now that CATL, the world's largest battery manufacturer, has announced plans to find a North American location and build, I think it's 60 to 80 gigawatt hours of production. And then we've got LG Electronics from Korea partnering with Stillitson, the owner of Jeep and among other brands, to build a plant in Windsor, Ontario, Canada. Have you had any discussions with any major Chinese battery manufacturers at this point?
No, we have not. But I mean, it makes, what people are doing makes sense. So part of our business plan is to produce lithium from the United States. We have a partnership with a company called Insortia that extends to Chile and Argentina. And then we want to be very heavily involved in North America. So, that's a key target for us.
You mentioned on your website about a greener process for processing lithium. And obviously we've seen in the news, expressions of concern from the environmental groups regarding the effect on habitat in Chile of salt pond evaporation, solar evaporation, as well as concerns about the volumes of water required to continue with especially additional processes involving salt pond evaporation from more salars. There's some concern that there's a limit to how much production can be allowed using that process because of the heavy water usage and environmental risks. So your process, I'm assuming, uses much less water overall than the salt pond evaporation process?
We don't use acid and base. It's not required for this process. I mean, if we end up in a brine that is highly alkaline, we may add a little bit of hydrochloric acid to bring the pH down where it would be optimal. But acid and base is not used in our absorption cycle. So basically, brine goes through our extractors. We pick up lithium and chloride ions selectively, and then we extract the lithium chloride with water, and then we get a very pure lithium chloride solution that comes out, and then we need to concentrate that up. And so we've developed a really cool technology for concentrating the lithium chloride solution from about 1 or 2% lithium chloride up to 12% lithium chloride without any evaporation. So then the processed water that we recover from that is recycled back into the plant. So we're projecting about a 98% water recycle in our operation. Due to the environmental issues, particularly in these really sensitive areas, we are going to have build a lithium carbonate / hydroxide plant on the coast of Chile. And therefore, what we will do is concentrate lithium chloride up to approximately 30% by weight. And then we will ship that down trucks to the plant location on the coast where we'll make the hydroxide and carbonate. And then we'll backhaul water from a desal unit back up to the plant. So that's where we'll get all of our water. So this whole process is designed to use minimal chemicals and to conserve water to the max.
Is your business model then to provide the service of extraction and concentration of lithium products on behalf of the owners and operators of solar and brine-based operations? Or is your business more to participate in the ownership of those brines and solars with the operators and share in the revenue?
In Chile and Argentina, we have a license arrangement with a company called Insortia. And there we have a royalty. We receive a royalty on the sale of final products. We build on a cost-plus basis, and then we operate on a cost-plus basis, and we own 10% of the project. Okay, so that's for Chile and Argentina. We don't have anything set in the rest of the world. So our goal outside of Chile and Argentina is to become a lithium producer. So we want to own our own resources. I'll do joint ventures with people, and we can look at any kind of business construct, and it may or may not make sense. But the main thing is that we want to be a producer. So we'll go from the brine to high purity final products to the battery manufacturers or whomever wants those things, and that's the direction that we want to go.
The Clayton Valley is sort of the only place where there's considered to be high quality lithium brines, if I'm not mistaken, and elsewhere, and through extensions of that geology, it's more tied up in clays. And so does your process deal with the clays as well as more liquefied brines, or is it specifically just for liquefied brines?
No, we're really interested in the brine chemistry. When I was in graduate school, I did some lithium extraction from clays, and that's a lot of work. It's a pretty nasty process. Consumes a lot of chemicals and makes a huge mess. That's more difficult than extracting lithium from spodumene.
Right. So right now, 52% of the world's lithium is coming from spodumene hard rock sources using more or less traditional mining methods. Do you see that ratio of hard rock sources to lithium brine sources switching out over time and lithium brines taking the lion's share of global supply?
So we built a plant that's nominally 5,000 metric tons per year to produce lithium chloride. And now recognize that depends on the lithium concentration in the brine, because all these things are hydraulically bound. You only pump so much water through. But this is nominally a 5,000 ton plant.
Right.
And we're going to be firing it up in a few weeks. And we'll start processing. First of all, we'll do water and all that kind of stuff. Then we'll put the absorbent into the system, and we'll start extracting lithium from brine. And we expect to be doing quite a lot of that in May in particular. And we have people who have signed up to deliver real brine to us from various locations. So there's potentially 2 locations in the United States that will ship tankers to us with brine. And then there's the possibility of brine from Argentina and brine from Chile. And so hopefully we'll end up with 4 of these brines, and all of these have different character, and that's one of the reasons I want to run them all.
Are there any competitors out there that you see sort of nipping at your heels in terms of direct lithium extraction? There's a lot of companies out there making claims, but there aren't too many who have actually done it. There's maybe 3 instances of actually commercial production of lithium through DLE processes. So you don't see the competitive landscape getting crowded with this type of approach anytime soon?
The big distinction between what we're doing and what other people are trying is this whole mobile concept and the time to market, and it's a much lower capital cost to go with, this modular approach than it is for a conventional plant. And if you go back to the situation with demand and the shortages, we will be able to address that much more easily than anybody else will. But the key thing on this thing is this modular. There are a lot of small salars. And if you were to go out and look at all the lithium that's in the small salars, it may be equivalent to the lithium that's in the big salars. But you can't afford to build a plant on them because they may only last 5 or 6 or 8 years. We can put our modular system in there. We can run it at whatever rate we choose. And then when we have reached the end of the life of that salar, we pick the equipment up and leave. And from an environmental standpoint, it looks like it did before we got there. And then we move our equipment to another salar, set it up, and keep going. So, that's another key advantage. So we can reach more salars than the conventional built processes can reach.
John, we're going to have to leave it there for now.
Thank you.
All right. Well, thank you very much for your time.
I appreciate it very much.
You bet. Bye for now. So here's the great thing about this company is it's took off. You could have sold your shares at $7.50 a share just last week. However, or this week rather. But this is what you call a blow off when all the people who have bought down in here are making money. All the people who bought back here are really making money. And so this is the near term top. That always induces a sell off. But I'll bet you dollars to donuts that this is a buying opportunity right down here at 528 because this is where you
get the snapback.
Yeah.
Yeah,
anyways,
you get the snackback.
So as John was saying, he's going to start
Snapback.
producing lithium using this direct lithium process. They don't have the expensive properties. They own the technology. The interesting thing, though, is the founder of this company is a gentleman with whom I am acquainted, and he has founded another direct lithium extraction technology that we will be bringing to you shortly, just as soon as we can get it properly papered in the Canadian context to satisfy the requirements of regulators. So yes, what happened here can be repeated. And we're going to watch it happen. Right here, you got a ringside seat, people. Right here, Ed Milewski's co-hosting tonight.
Yeah.
A big fight.
Yeah, it's a volatile stock, and it's done it before. It did it back there.
Yeah.
Big correction, and then resume uptrend.
Resume.
Zoom.
Anyway, so we have another guest here.
All right.
Trent Mell is going to join us, and Trent Mell is the CEO of a company that is going to be the first cobalt refiner in Canada.
Really? And where is this going to be?
New Liskeard, Ontario.
Okay.
Here's Trent Mell. This thing's going live in like 200 days. My next guest is Trent Mell. He's the CEO of Electra Battery Metals Corp, trading on the TSX Venture under the symbol ELBM, and in the United States under the symbol ELBMF. Trent, welcome.
Thank you. Thanks for having me.
You bet. It's a pleasure. Trent, tell us about building North America's first battery materials park.
Yeah, it's been a journey. So we started this company 5 years ago called First Cobalt, and the thematic hasn't changed, right? It's all about electrification of transportation and what batteries means to our future. Back then, we focused on cobalt mining because most of the cobalt today and for the next little while is coming out of the DRC. And as we started doing it, and we made some good progress. We got a great asset in the state of Idaho that I'm convinced will be a mine at one point in time. But as the company grew, we acquired a refinery in Canada. And that journey took us downstream to mineral processing and to convert cobalt into a battery grade. And so now in our discussions through 2021 with battery supply chains, the OEMs and their battery makers, we're seeing that they want an integrated site. They want to see cobalt, nickel, recycling all in one location so that you can take all that material and put it into the precursor, that first step of the battery process, all in one chemical park, save CapEx and save your OpEx. So we rebranded in November as Electra Battery Materials, and we've now articulated this 4-phase strategy to get us from being a cobalt producer, refiner, to something a lot more ambitious for North America.
You have this park established, ready to go, start processing?
This is an existing refinery that historically produced cobalt, nickel, and silver. but it wasn't battery grade material. It was smaller, not battery grade, but you got about $100 million of infrastructure there. So roads and power, tailings and buildings and equipment, but it just needs to be bigger. And so, and over and above the CapEx, I guess more important, you got the permits in place, which is huge. And so for us, it's double the footprint to get, we call it phase one. Phase one is our cobalt production, which is coming this December. But we've got, to your point, 600 acres of land. So we've got ample opportunity here to go from cobalt and then to recycling, and then probably partner on the nickel, because those are big facilities, and then invite somebody in on the precursor side to set up shop adjacent us as well.
So where is this located exactly?
It's about 5 hours north of Toronto, in the province of Ontario, and contrast that to where it's coming today. Japan, Korea, China. Carbon footprint location is fantastic for the North American supply chain.
So your input at this point is coming from cobalt mine somewhere in Ontario?
What we're doing, we're basically diverting cobalt that currently is coming out of Africa and going to China, and we're bringing it, instead of sending it to China, we're bringing it to North America. And so that's the supply chain. And the way cobalt is mined today, most of the world's batteries is reliant on cobalt out of the DRC. And as much as we want that to change, the DRC, it is the Saudi Arabia of the EV world, if you will, for cobalt. Over time, we see more recycled content coming to market, supplementing that. I think Idaho is going to play a role. Needs a few more years to mature, but we've got solutions right here in America that can help reduce that reliance.
Who is your customer? Who's going to be buying your output?
I guess that's the big secret, if you will. We're getting close. We've got a backstop trader that'll buy 100%. Trading, selling the product won't be a problem. We're in deficit. We're one of two big producers outside of China once we start operating in December. The OEM contracts that we're talking to, the EV manufacturers here in North America, as well as their battery makers, and we're making progress. We've got 3 parallel conversations. I think I know which one will cross. Hard to time, right? These are big companies. And if you look at the investment announcements we've seen over the last year, it's been focused on battery making, more recently on the cathode investments. And so they're working their way upstream. And I think our turn will come in the coming months.
Describe for us, please, if you would, how does the sort of business flow work? You buy cobalt from China, or from DRC rather, have it shipped here, refine it, and then ship it back out, selling it to an end user.
Effectively, this company is a chemical company, right? We've still got mineral assets that will play a role, but we're staking our future on being that chemical. Think of BASF, right, in Europe, a big producer. They're a big chemical company. They're in North America as well. So if I were to think of if I dare call them peers, they're much, much larger than us, but Umicore and BASF would be what we're aspiring to become. And so, we buy material from the open market. I shouldn't say open market, because cobalt, you got to be really careful with sourcing. So we buy from, frankly, the biggest and the best, and then we sell it on ultimately to an automaker, but through their supply chain. And the supply chain, and you can see it with Tesla, right? Tesla is getting more increasingly involved in each step of the supply chain. But we do know, as an industry, it's pretty disparate, pretty bifurcated. And I think that vertical integration is going to be a feature we'll see over the next 5 years.
Looking at a cobalt chart, it has essentially increased by 180% since July of last year in price. But it still doesn't have the sort of, it hasn't done what lithium's done. Lithium's gone up by 5x since the beginning of 2021. And, but it's still, everybody talks about the cobalt shortage. So is it difficult to secure supply? Do you have to bid? How does the acquisition process work?
Because most of the feed is going into China right now, you think of the supply chain disruptions we've had, right? Whether it's COVID, whether it's microchips, that concentration of feed into China is not desirable for anybody. And so the fact that we're setting up outside of China is helpful to everybody. The only other producer of note is Umicore in Finland. And so we're that other player. We'll be 26% of the ex-China market once we're up and running. And so we've had a lot of interest. So the 4 biggest operations in the DRC are owned respectively by Glencore. We've got 2 of them, ERG and China Moly. And so we're buying from those 4 big operations. And I would say all of them are very keen to see just a diversity of buyers for their feedstock.
It's been sort of bandied about in the media that there's no way to recycle these batteries. And so I've been hearing people talk about it. And so what is how far are you away from being able to do that?
We're close. So if you think of battery recycling, there's really two steps. There's the established supply chain that does the collection of batteries, and that any and every battery, just like brake fluids and tires, right? There's a network of companies that'll go out and collect these batteries and do the discharge, the storage, and eventually they shred the anode and cathode into what we call a black mass. That's like a powder. This is where we step in. 90% of material today goes to Glencore's smelter in Sudbury, and it's a pyrometallurgical facility, heat-based treatment where they don't recover lithium, they don't recover the graphite. It's just the nature of the process, and there's a bigger carbon footprint. The way of the future, we see this in China, and it'll be this with the way with us is hydrometallurgy. So that's where you take this black mass and with an acid leach, you dissolve it into solution, and you can extract everything. And so our process will extract cobalt and nickel as the big payables, but also copper, graphite, lithium, manganese is an option as well. Not very payable, but so how close are we? We're about, I'd say we're about 5 months from a demonstration plant. And this is the beauty of our system because it's already built and in existence. We've got the permits. Well, we got most of the permits, but we've got the tailings. We've got the equipment already in place to do the demo plant. Because as we build out our cobalt plant, relative to some of the legacy equipment we have there, the equipment is, a lot of it's kind of on the small side, perfect for the recycle market. And when you think of recycling, right, there's today, the market is really our laptops, our cell phones, our power tools, because those are the batteries that are coming into the scrap heaps, if you will. EVs are still a few years away. So there is, you got to stage this. The beauty with today's supply, high cobalt content, the supply of tomorrow in batteries is going to be high nickel. So the flow sheets will have to adjust, but the most valuable metal in the battery today is that cobalt. So not a bad footprint. We think we could be commercialized in 2023 on the cobalt. So that's, that'll add to the EBITDA that we're projecting on the cobalt. So cobalt in late this year into next year. And then the recycling within 12 months, we think we can commercialize a recycling line.
Have you got any sort of projections on finances, the economics of this going out into 2022, 23, 24?
I mean, we projected the production on the cobalt is an easier one to show. We're looking at 5,000 tons of cobalt in phase one, increasing that to 6,500 tons. So that's 5% of the world market. So a pretty notable 100% of North America, maybe more to the point. EBITDA of up to $40 million US per annum once we're fully ramped up. We haven't given guidance on recycling. We want to run our tests and basically size the equipment, decide how big we make the circuit. We've got we've got relationships with about 30 providers of battery black mass that we can draw on. But you got to think we wouldn't be doing it if we weren't making at least $10 million of EBITDA on top of the 40, right? So, as a forward multiple on chemical companies today, 10, 12 times EBITDA, we're probably trading at 3 or 4. So there's a real opportunity for us to re-rate at 3 or 4 just on the cobalt, add the recycle to that. I think investors could do well if they believe in our story. So
you're developing a cobalt mine in Idaho. Is there a lot of cobalt supply from the mining side coming up in the future?
Yeah, the Idaho, we call it the Idaho Cobalt Belt. It's a unique geological feature worldwide, very unique. You don't often get primary cobalt deposits. Cobalt typically comes out of nickel mines or out of copper mines, and Idaho it's the other way around. It's mostly cobalt with a healthy amount of copper as a byproduct. So we've got ourselves in Jervois that are developing assets, but I see a lot there. I see a lot of high-grade underground assets across that belt, which spans about 80 kilometers. You'll start to hear more and more about it. The U.S. has always been challenged from a permitting perspective. It feels like for critical minerals, that's going to get a little easier. We're on private land, so we've got that advantage. But what could Idaho produce as a belt? I mean, I think you get 5,000 or 6,000 tons a year comfortably out of that belt. Ourselves, Jervois, and maybe another player. We're still some years out. We're probably 5 years out from production. I love the belt because it's in America, right? It's a critical mineral right here on our continent. It's not yet ready for prime time. We don't get a lot of value because we're so focused on the refinery. I think our market valuation is driven off of that. But there's definitely lots that can be done by us and others in that belt.
Okay, Trent, well, that's a great introduction to the company. Fascinating story. We'll have you back soon. I appreciate your time today. Thanks for joining me.
Yeah, thanks for the opportunity. Take care.
You bet. Bye for now. This is Trent's company. This is the chart. As you can see, it's been sort of grinding along sideways here. But with today's news of the Canadian government, federal government, investing $2 billion in the production of battery metals, clearly Electra Battery Materials is well positioned to be a beneficiary of that largesse.
Largesse.
Poise.
Largesse.
Largesse.
Oh, I like that word.
Largesse.
Yeah.
Anyways, yes. So yes. Electra battery metals coming soon to. So yes, as Trent said, they're going to start with cobalt, but ultimately this could be a major metals refining industrial park. That's what he's got envisioned. And I think his timing's outstanding.
What about that Fed, eh? What about that Fed?
What about that Fed?
Brainerd.
Bernard said policy tightening will include a speedy reduction in the balance sheet and a steady pace of interest rate increase. Now that's like saying we're going to set the house on fire and we're going to pour gasoline on it.
I know. That's why the market's down 5%. Just like that.
Well, let's take a look at the commodities complex again with this new intelligence in mind.
Okay.
Like, look at lumber here. So, I guess I didn't have to rush out and buy any lumber.
See? You know what?
I didn't.
In other words, they're putting, you know what they're doing? They're pissing on the fire.
Yeah.
And they're not putting fuel on the fire. Well,
they are. By withdrawing stimulus.
No, I know. They're pulling back because they don't want inflation.
The question
they don't want
inflation.
Though,
is that
it?
Reducing the balance sheet implies selling the debt to somebody else, right?
Yeah.
It's not like you can just give the debt back to the Treasury. It's not matured yet. Treasury doesn't want it. Treasury needs more money, not less. So who are they going to sell all that debt to? You know,
they're going to have to, eventually they're going to print more money, but in the meantime,
but it
looks like they're going to pull back from that.
But where are they going to sell the debt? She says they're going to reduce the balance sheet quickly. What are they going to do? They're going to sell the debt, put the debt up for sale? Wouldn't you have to sell the debt at an aggressive rate and in a situation where the whole world, your entire customer audience knows that you have no choice but to sell it? Wouldn't that result in nothing but stink bids for that debt? And wouldn't that drive the price of interest?
I think the banks have to buy it back. I think there's the swap agreement. I think, I think they got to buy.
So we're going to, our bullshit.
I don't know.
Our bullshit strategies
I know.
Take on a whole new dimension.
You know what's really crazy? This is more of a statement after being around for a lot of decades. But the more you know, the more you realize you don't know shit, right? And so you know these things, and we talk about this stuff and 50 years experience.
The more I think I know, the more it turns out I've turned out to be right.
I know, but you know what? All you really need to know is, folks, it's really about certain people wanting to control you, and that way they get some money.
Ooh, yeah, money.
And it really comes down to the money thing at the end of the control. But it's a crazy world. You know, what are you going to say?
Yeah.
Duh. They're saying, okay, you want to see this? Watch this.
All right. Okay, so that's our show for today. We hope we're entertained and informed, though.
Yeah.
It's time.
I just want to say, if they keep tightening, the market's going to keep going down.
Yes.
That's the less money in the system.
Yes.
You know. That's the message, right? Be careful here, folks. Don't get bravado.
Yeah. Get ready to die.
All right. Beer time.